Like, great thing to be elected on is promising tax cuts, because I feel like everybody loves a tax cut. So they said that the average worker would be roughly $25 better off per week, enough to fund a 1 kilo block of cheese. Did they actually say that?
Yeah.
Oh, gosh.
I mean, I took the fact from a Deloitte article, so maybe they added some fluff, but I was like, sounds kind of legit.
I mean, it does, when like, I think the whole headline last year was like a block of cheese was $19 or something.
Exactly.
Yeah, okay. So an extra kg of cheese a week.
Yeah.
Or 3 coffees, depending on how you roll.
Welcome to It's No Secret, a podcast for Kiwis who want their money questions answered.
Ready, steady, go.
This podcast will answer the money questions you may or may not have on your mind. We'll talk to real Kiwis and share truths about our own financial lives.
Both the successes and the failures. Because the truth is, there is no secret to achieving financial freedom. Hello and welcome to It's No Secret. I'm Kat.
And I'm Christine.
And today we're back to chat about the upcoming tax changes in New Zealand that were newly introduced with the 2024 budget. Yay for a little bit of additional money in our back pocket. I was about to say free money, but it's not. It's already your money. So
yeah, we get taxed.
Yes, we do get taxed. There's money you're already earning and being taxed on, but you're just potentially going to be paying less tax depending on your financial situation. So to run us through, I guess, what are the changes? Last year, National campaigned offering Kiwis a big back pocket boost. Obviously, a lot of their platform about being elected was based on the fact that they needed to get the budget in order and the financial or economic situation in New Zealand back in order. Also, great thing to be elected on is promising tax cuts, because I feel like everybody loves a tax cut. So they said that the average worker would be roughly $25 better off per week, enough to fund a 1 kilo block of cheese. Did they actually say that? Oh, gosh.
I mean, I took the fact from a Deloitte article, so maybe they added some fluff, but I was like, sounds kind of legit.
I mean, it does, when I think the whole headline last year was a block of cheese was $19 or something.
Exactly.
Yeah, okay. So an extra kg of cheese a week.
Yeah.
Or 3 coffees, depending on how you roll. So the announcements that came a couple of weeks ago were consistent with this. Middle income earners are the biggest benefactors of the tax changes, and there weren't any kind of substantial other tax changes to businesses or pie tax funds or KiwiSaver. I feel like there's still a little bit potentially coming up soon on that, waiting to see what happens, but the announcements that were made were predominantly for individuals. So Christine, what was announced? What's changing? Talk to me about thresholds. That sounds very boring and technical.
Yeah. So, I mean, the one that's probably relevant to everyone is the individual changes. So that is your tax threshold band is moving rather than changes to the actual tax rate themselves. So
very important difference, right?
Key difference.
Yeah, so the rates have stayed the same, but the point in which the different rates kick in have changed based on the thresholds.
Yes, exactly.
Great.
So from memory, I'm pretty sure Labor was the government that introduced the 39%.
Yes, I think so.
Yeah,
yep,
and
so
I'm pretty sure National also campaigned on removing that.
Okay.
Yeah, there was something around that. So to that point, it hasn't happened. They've just adjusted the bracket that you're in.
Okay.
So these are going to be coming into effect on Wednesday, the 31st of July. So originally it was the 1st of July, I believe, but it's changed slightly. So it's slightly delayed.
So end of July.
Yeah.
In 6 weeks.
Yes.
Great.
Yeah. So we look forward to a slight boost then. But the maximum annual benefit for taxpayers under the threshold changes is $1,043. So that is $20 a week.
So a little bit less than what they campaigned on, but still nothing to maybe sneeze at.
Yeah. I mean, $20 a week for someone who's struggling that's what is that? That's a block of cheese.
Yeah.
Yeah. That's helping your grocery bill.
And if it's for a household and you've got 2 working adults, it's obviously at an individual level. So it could be, roughly $40 a week. Yeah. And I think there were some other changes, right, in relation to independent earner tax credits and also the family boost. So outside of course, the thresholds, which affect you at your individual rate and your individual tax, there were also some benefits around, family boost and other adjustments as well. So for some households, depending on your total household income, you may actually be eligible for a slightly higher annual benefit, depending on your situation. There's a really handy calculator that National put together, which I think, correct me if I'm wrong, but I think if you Google budget tax cuts national, you'll basically find this website, because we did it at work a little while ago, and you just go through basically a checkbox exercise of saying what your personal situation is, and then it'll give you an estimate of what your tax changes will be upcoming, and they do it at a household level. So I had to answer, like, do you live with anyone else? Yes, I do. Do you have dependents like Lily, rah, rah, rah. And so I think from memory, you and Ollie and Lily, Luke and I had the same uptick, hey?
It was like 45.
I think, about $45 a week.
Yeah.
Okay.
So we were the fortunate beneficiaries of that.
Yes, exactly. So that's going to be quite fun. For us, the family boost, I think, is probably an important one to mention, because this is something that can help with weekly childcare costs, and also I think really benefit those that are in that expensive time of life where you're perhaps a single income household, because someone's at home with like childcare or whatever that situation might be. And so that's really awesome. But caveat is that this is only for households with total income below $180,000. So if you have two working people that are earning a collective above $180,000, but if you do not, then from the 1st of July, parents will be able to claim back a bit of money or additional money to the cost of weekly childcare costs, which is really awesome. There's a little bit of admin involved. I'm not fully across all the admin, but there is a little bit of admin, but I'm assuming that, childcare centres or whatever your childcare situation may be will be providing info, so it's easy to claim. But I think that's a win for obviously working families.
For sure. And just to clarify on that, you can claim back up to 25% of the weekly childcare cost, up to a maximum of $75 a week. Which is like significant. That could be up to a day of daycare. It is,
exactly. I was going to say that's pretty close to a full day, like a full long day of daycare costs for Lily. So if that meant, one whole day paid out of like 3, 4, 5 that you're paying for, that can seriously help.
Totally.
And also make, the situation around whether or not you return to work in a part-time or full-time capacity also potentially easier for some families, because they do juggle that trade-off of, paying for childcare versus earning money.
Yeah. And to claim that back, parents will just be required to upload invoices to the IRD on a quarterly basis. So it's you spend the money and then you get it kind of rebated back. You're going to be given an automatic credit, basically. Yeah.
Kind of love that in the sense that it prompts people to have financial dates, financial check-ins, make sure you're on top of your financial life admin. Also, maybe don't love it from the point of view of like working parents or parents that are just looking after kids, busy time in your life, where are they going to find this time? So make sure you chat to whoever's in your household and be like, whose job is this? Who's going to be doing this work? Let's sort this out. Because it's certainly worthwhile, particularly if you can get the $75 a week. Like that'll add up to a decent amount of money over the course of a year. So it's worth the effort. Any other changes? Any other thoughts?
Not changes. I do have thoughts though, because I was digging into some of the media articles, in particular one that was published by RNZ, which actually was a really good article. But it's quite interesting to see the sentiment on the budget and these bracket changes.
Yes.
And a lot of kind of independent economists and tax experts basically are saying that it's a bit of a joke.
Say more. Which bit specifically?
So the exact quote is, "It's quite wrong to make these band adjustments political. We should not have to pay for inflation. It's been dressed up as a tax cut, but is it really?" Right. So that was one. And then tax expert Terry Belsher said households at the lower end of the income scale would probably feel the impact. At the lower end, where every penny counts, they'll be grateful, but it'll go straight away on just paying the bills or paying down debt. He said the change did not come close to covering recent inflation, but a lot of them have also said that the bracket shifts might unwind the impact of 12 to 18 months of price increases. So it's basically just winding back the dial about a year and a half.
For cost of living.
Yeah. And so a controversial statement that was made also is the working for families threshold for clawback of credits was way too low, he said. This is Terry Belsher. The poorest people are paying for tax cuts for the landlords. If you're saying a family income of $42,000 is sufficient in what year?
Yeah.
So while it's great, obviously, that we're getting these tax bracket adjustments, there's definitely also some sentiment around, was this the right move? Could, are we subsidising landlords?
Yes.
Is the scales potentially not tipping in the right way again? So there's, But I will say to this RNZ's article, they basically break down, and happy to link it in the show notes, break down what the impact of all of the tax changes are dependent on your situation. So they go through things like if you're a single parent, you've got 2 children aged 3 and 5, part-time net income of $30,000, no childcare fees, like this household would receive a tax cut of $1,400 per year, a $54 fortnight according to the government's calculator. And it kind of goes and breaks that down. So it's really helpful to kind of scenario out what your benefit would be. So we will happily link that in the show notes.
Yeah.
Yeah, that's my 2 cents. Any thoughts on that?
I mean, well, we've talked about it a little bit in the past in the overall sentiment of like, do you and I personally agree with like needing tax cuts? And I think I am certainly on the point of view of I don't feel like I need a tax cut. It's lovely that we're going to get some money back in our household, but ultimately we're in a very privileged position at the moment where receiving $40 a fortnight is not going to materially change our current financial situation or spending. Us making other changes around how we spend our money will be more impactful than that. Whereas I can completely recognise that for people in lower income brackets and different situations with more children, or, not having the option to have childcare, all that kind of stuff, these are material. Or if you're in jobs that it's very hard at the moment to get particular pay rises and so your wages are not keeping up with inflation, then that's where this money really needs to be focused. For sure. And so it's tricky because I think a lot of people would potentially agree with that, but then when you're a politician putting these things in place, you're trying to keep the sentiment of the general populace and like the voting populace happy with you. And the reality is that National came out very strong in favour of like landlords and those that have the ability to have investment properties and other things. And it can be seen that then kind of disadvantages others. So that's a bit tricky.
Yes. Second that, completely agree.
And because then I think, we were talking about when we were prepping for this episode, well, okay, what are we then going to do with our tax break, so to speak? What are we going to do with our extra money a week? And, exactly. I think it's relevant noting in that conversation that for some people, as it was highlighted by that tax expert, like that's just going to go straight back into bills and rent and affording the cost of living or increased mortgage repayments. And that's absolutely where this money should be going if that's where your situation is at, because to your point, like this is essentially undoing the last 18 months of cost of living increases. And if your cost of living is your primary concern, then hell's yeah, all your money should be going here. Exactly. If you find yourself in a different situation where your current cash flow and budget is already covering your cost of living, going to go out on a limb and say that you and Ollie are in that group. How do you think about approaching even just like a small increase in, even if it's, let's say, $1,000 over the year, what would you guys look to do with that money? Do you have a plan in place to make sure it doesn't just get like frittered into additional lifestyle spending?
Yes. Yeah, great. I mean, my immediate thought would be to just increase my AP that goes into savings or investments, because then it's, or you could, if you wanted to go further, you could do something like increase your KiwiSaver contribution rate, because then it's, you just don't even see it come through your wallet. I know that, I acknowledge that, but could potentially be more than the $20 or $40 that you might receive on the fortnight. But at the same time, then it may be a motivation to save more.
Exactly. Yeah. And I think as well with that, like on the savings note, really good opportunity for people that even if you are in the situation of feeling across your budget and that this is like a win for you, it's an addition, it's not, helping you keep your household afloat kind of situation, that this is a good time to start building up more money into your emergency fund or just like that rainy day buffer, right? Because we're not out of the woods in terms of like where the economy's at, and there's still a lot of like nervousness in the air around jobs and security, or the potential for even having increases to wages and pay. And so if you feel like, okay, we're on even footing now, but we're just a little bit cautious about how the next 12, 18 months will flow out, then I think it's probably a great thing to have an extra $1,000 sitting in your savings account.
Yeah, definitely. Love it.
Nice.
Awesome. Good. Round out. Yeah.
Hot tips.
Actually, yes. Last one. Okay. So something that is kind of an extra layer, I guess, to the tax bracket adjustments and then the family boost and things like that, is that the Parliament has tabled a few budget legislation changes that they want to change in the coming year. I haven't listed all of them out here, but a couple of them are things like change PAYE, M and ML and secondary tax codes from 31st of July 2024, change extra pay rate thresholds from the 1st of April 2025, which I think could potentially be good.
Yeah.
Change thresholds for prescribed investor rates, PIRs, for investors in portfolio investment entities, PIs, from 1st of April. I thought that was
This will be a big
relevant.
one, depending on where this lands, because this affects everybody, because this is also affecting people's KiwiSavers, right?
Yes.
So any change to PIR rates will also affect the tax that is paid on most people's KiwiSaver balances. So even if you're not investing in PI funds right now and you think of that and you're like, oh, that doesn't apply to me, that is a very, very, I think, like politicized hot topic one that will be highly watched by the industry, because it will affect every New Zealander, essentially, or all working New Zealanders that are in KiwiSaver, which is a lot of us, many millions.
Yeah, and then another one that I thought was interesting was change to resident withholding tax thresholds from 31st of July, which also affects things like savings accounts as well, right? And just your personal savings rate.
Yeah.
Love this. There's a few more, so we will definitely link the article in the show notes, but worth kind of digging into the details. I think there's it's easy to skip past those details which aren't necessarily in the headlines, or those three kind of changes that we talked about. Yep.
Love this.
Yeah.
Okay. Well, I mean, from the end of July, a little bit more money in our back pocket, hopefully. Yeah. We've got 6 weeks, people, if you haven't thought about what you're doing with that already, or if you haven't figured out how much you're entitled to or potentially will be getting back, definitely jump on the calculator. It's worthwhile checking out and chatting about it with whoever's in your household in advance. One thing that Luke and I have done already is jump onto our little Westpac app and slightly increase our mortgage repayments on our primary mortgage, because you can literally just do it through the app. So we've just increased our fortnightly mortgage repayment by $40 or whatever the amount was to our household, because if I just do that, then I don't have to think about it in 6 weeks time, and that happens. So whatever your I guess outcome is, get it in place, start thinking about it. Otherwise, we know all too well that money will just go into general expenses, discretionary things. And it would be nice to look back in 12 months' time and feel that we've put our $1,000 or so into something that has moved us forward.
Yes, nice. Love it. Yeah. Nice. That's a good rounding comment.
It is.
Thanks for listening. We will, actually, if you have any thoughts, feedback, at It's No Secret NZ.
Love that for you. You're like, actually, no, wait, we do want thoughts. We do want feedback. We also want you to come find us, on Instagram at It's No Secret NZ. And otherwise, we will chat to you next week.
Bye.